Welcome to today's Explainer. We are jumping right into something completely out there today. We're going to take a deep investigative look into a highly unconventional financial presentation known as the W-4 recoupment process. Now, our goal here is purely educational. We're going to neutrally unpack this source material step by step just to understand exactly what this fascinating and totally alternate view of personal finance and the tax code is actually proposing. Okay, to really wrap our heads around this material, we have to start with a massive paradigm shift. I want you to just temporarily step into a completely alternate financial reality for a minute. The fundamental question driving this entire presentation is this. What if you were the source of your credit, not the debtor? Think about that. What if every single bill you received was actually proof that a corporation owed you money? It's a radical premise, for sure, and as you'll see, the paperwork required to actually execute it is incredibly intricate. Because this theory relies on some highly specific multi-step actions, here's how we're going to map it out. First, we'll cover the SSN estate premise. Then, the W-4 sandwich architecture, the method C valuation calculation, those very specific endorsements and required stamps, and finally, deputizing the IRS. Let's start with Section 1, the SSN estate premise, the idea that you are not the debtor. To understand the pretty wild paperwork required later on, we first need to understand the source's unique worldview. The whole foundation of this process relies on completely redefining what a social security number actually is. The presentation defines the SSN estate as a totally separate entity from you, the living person. According to this theory, your social security number represents an estate that corporations essentially tap into to fund themselves. So you, the individual, aren't a debtor who owes the money at all. You're just the agent managing that estate. In this paradigm, everyday people are literally generating fiat credit every single time they sign their name to an application or a contract. You see that glowing pen graphic on screen? That's actually a huge visual metaphor for them. The presentation claims that back in 1933, the government entered bankruptcy, which fundamentally shifted the entire financial system. Because of that bankruptcy, it asserts that the true authority to issue credit reverted back to the people. So when you sign for a credit card or set up a water bill, you aren't borrowing their money. Your signature, with that glowing pen, is what authorizes a brand new issue of fiat credit. You are the creator. And because you are supposedly just the agent of this SSN estate, the source asserts you have a strict legal fiduciary duty. It's your job to keep records and report the transfer of this credit back to your principal, which they identify as the IRS. This whole concept of a legal duty is exactly what sets up the need for the elaborate paperwork we're about to look at. Which brings us to Section 2, the W-4 sandwich architecture. Basically how you go about reporting this credit. So this W-4 sandwich is the primary mechanism the source provides for reporting your credit. It's basically a stack of 3 specific IRS forms. Step 1 is the W-4, used here to assess the withheld value. Step 2 is the 1040V payment voucher to direct the transfer. And Step 3 is the standard 1040 statement of return. But here's the real kicker from the Q&A section. They instruct their followers to create a unique, separate sandwich for every single account in their lives. We're talking gas bills, phone bills, water bills, literally every account gets its own stack of these federal tax forms. You can see here how these 3 documents physically stack together to form that architecture. Now, in this framework, they absolutely are not functioning as traditional tax returns. Instead, the text claims they act as disbursements from the SSN account. The W-4 assesses the value, the 1040V directs the payment, and the 1040 satisfies the paperwork mandate. They are essentially trying to use standard everyday tax forms as a completely different type of financial instrument. Moving right along to Section 3, the method C valuation calculation. Okay, before you can fill out a W-4 sandwich, you have to know how much money to claim, right? Well, this requires a highly specific mathematical formula that they call the method C valuation. Let me break down how they arrive at these numbers. Step 1, you take the total months an account was open and multiply it by its highest ever credit limit. This calculates your total quote-unquote charges. Step 2, you assume you paid that exact same maximum amount every single month, essentially mirroring the charges to calculate your payments. Finally, in Step 3, you add those massive charges and payments together and just subtract any small remaining balance. This resulting mathematical explosion is the assessed liability that you place on line 4C of the W-4. To really see this in practice, let's look at this specific math from the source's own example. This is for an old Sears credit card. The account was open for 238 months, with a high credit limit of just $1,220.
Well, by multiplying those two numbers, mirroring the result, adding them together, and subtracting a small balance, a standard retail credit card is magically transformed into an assessed liability of $580,671. This staggering number is the value they claim the corporation withheld from their SSN estate. Now, you might be wondering, how do they justify this massive leap in math? Well, the source points to standard credit reports and monthly statements. The text explains that if you request an accounting from a corporation and they just ignore you, which, let's be honest, is highly likely when you're asking about SSN estates, their failure to respond makes your alternate valuation stand by default. They literally treat these standard documents as unsworn confessions of withheld value, essentially turning corporate silence into an administrative fact. All right, Section 4, Endorsements and Required Stamps. This is honestly the most visually eccentric part of the whole shebang. When you compare their typed rules to the physical execution, you see the source demands strict adherence to these almost ritualistic physical actions. You have to use specific colors of ink, usually red and blue. You absolutely must include very particular routing commands like pay to United States Treasury. And most uniquely, you are instructed to affix canceled 2-cent stamps, specifically Navajo jewelry stamps, diagonally to the documents. Yes, diagonally. Applying this to everyday items, just take a look at this marked up utility bill. The source demands proponents intentionally handwrite specific phrases right across their corporate bills. You can see pay to United States Treasury acting as a routing command, and crucially, the phrase given for a patent right. According to the presentation, using this exact phrasing satisfies some very obscure commercial codes to force the transaction through. And the list of physical eccentricities required is just extensive. Beyond the specific phrasing, documents have to feature a red thumbprint placed exactly over the last letter of your last name. You have to write "done in good faith," followed by your social security number, but absolutely no dashes. You must physically autograph your name directly over the postage stamp so the ink bleeds onto the paper. Oh, and it requires a $1 stamp on the front and a 2-cent stamp on the back. These intricate steps are claimed to be absolutely crucial to validating the whole process. Which brings us right back to their foundational premise. In the Q&A transcript, the speaker explicitly advises signing these documents with this exact phrasing, by authorized representative for the represented person. This acts as a constant physical reminder of their worldview. The signer is constantly insisting they are not the debtor, they are merely the agent acting on behalf of the represented person, the SSN estate. Finally, Section 5, deputizing the IRS as a collection arm. So what are you actually supposed to do with this massive pile of stamped, thumbprinted, and mathematically explosive paperwork? Well, the source attempts to drastically reframe how the public perceives the IRS. It explicitly tells its audience, the IRS is not your enemy. Instead, it claims the IRS is simply the collection arm of your United States Treasury account. By submitting this W-4 paperwork, you are supposedly giving the IRS the ammunition it needs to go fight the big corporations on your behalf.
And the ultimate action plan culminates right here. Proponents are instructed to compile all their W-4 sandwiches, their 1040s, and their redeemed marked-up receipts, and mail the whole package to a very specific location, the Remittance Office, room 3413 at 1500 Pennsylvania Avenue in Washington, D.C. The end goal is to let the IRS audit the transferee corporations and expose their supposed hidden tax liabilities.
Which brings us to the fascinating paradox of this entire source material. It is perfectly captured in this suggested cover letter quote. My intention is voluntary compliance. I am here to help ensure everyone pays their fair share of taxes. Think about that. The presentation coaches individuals to use highly unorthodox, fringe legal and financial theories, but to do it entirely under the guise of being a dutiful, ultra-compliant citizen who's just trying to help the government audit corporations. And that leaves us with a pretty profound question to ponder as we wrap up this explainer. The W-4 recruitment process relies on a completely different interpretation of how money, signatures, and government institutions even function. So if our belief systems dictate how we interact with the law, where exactly is the line between searching for a clever legal loophole and operating within a completely alternate reality? It is a fascinating look at how complex financial systems can be reinterpreted. Thank you so much for joining me to explore this incredibly dense and unique material today. Until next time, keep learning.